So everyone, wanted to do a quick recap of this position over here on YM that we've taken today, right? Or at least tape ready today, right? So again, this recap will be with advanced liquidity concepts, right? And we will dig into why this happened, all with liquidity logic. So the first thing we do, right, when we approach this chart is to mark our SNR levels, right? This is the first thing I do when I step into the chart, right? So we can clearly see we have this support and resistance zone over here, and we have this resistance zone. So we had this resistance, and we have this support, very clear ones, right? So the first thing we need to do when using these resistance zones is to mark the first swing high above the resistance zone. So you can clearly see over here, if we step in above, we can see this is the first swing high, and this high was taken, as you see. So the first swing high above the resistance was taken. This means, very simple, that our buy side has been taken. We can also see price has entered this fair value gap after taking the buy side, signalizing us that we can go down, right? Because we've taken the buy side and entered a PDRA. Now we can also see that price has formed this support, right? And you can also see this resistance we had has now broke above and rests as a support. So technically, after going above a resistance, retail are seeing it as a support. So retail want to buy the support now, right? So we've taken the buy side, we've tapped into this FEG, and we've given retail a chance to step in the support, right? So retail are buying over here. And how they are buying, right? So they are buying based on market structure and based on swing points. So if I'm a retailer and I want to buy, I'm entering a long position over here, right? I see this accumulation, I see price is rejecting, so I'm entering a long position, right? I'm triggering a long position and I'm aiming to the high, right? So I have a clean 1.6 hour position over here, right? So this is current retail position, right? We use this resistance that the support that was once a resistance. Now price has made this bullish market structure and retail are looking to buy, right? If we take the range, we can see that price is going below the discount and retail are getting a very good position over here at the support. So they are placing a buy position, stop loss at the first swing low below and at the low of the market structure. This means we have liquidity over here at this low, and this is their target, right, over here, somewhere over here. So we don't want to see price reach this zone before reaching this low. Really simple, right? So we utilize retail position and use it against them. So we've taken the buy side, enter this gap and gave retail a chance to step in, right? Based on the liquidity system, step one is engineering liquidity. Over here we've taken the buy side engineered. Step 2 is taking the buy side, right? Step 3 is giving retail a chance to enter a position like over here. Then we are getting this position, right? This position helps us to map out our liquidity, right? So we want to see price reach the sell side before the buy side. We want to see price reach the low before getting towards the high. Now, after doing this analysis on our time frame, we can dip into the lower time frame, right? So what do we understand over here? If we make it slightly brighter, we can understand that retail have bought over here and price is manipulating to the upside. As you can see also over here, the manipulation from the support, right, over here retail are buying, price is manipulating to the upside, giving them a false view that their position works. As you see, price goes towards this gap. Also, you can see we've inversed this gap, right? So a lot of confirmations, both from the liquidity side and the PDRA side. So after getting into this FEG, I'm expecting price to deliver towards the sell side, right? So this is our sell side. And as you see over here, price goes down, right? And returns back to this support. And as you know, how do we find liquidity? We mark the first swing low below the support. So over here, we can also see how price is manipulating retail into buying the support over here, right? They're entering these positions, placing stop losses over here, targets over here, and they have stop losses at the low. So we have very strong liquidity at this low. So we can drop to the lower time frame and expect this move to happen, right? So If we return over here, this is how we view the charts before the New York session open, right? So let's go to the 15-minute. What do we see over here? We see price over here gave retail a chance to step in longs. They have their stop loss over here. Also, we can see we have this fair value gap, right? That gives a false view that price will go up. Then after taking the buy side and giving retail another chance to step in, right? We are not in a position yet. We are waiting for the New York session. So price is manipulating to the upside. As you can see over here, price has taken this swing high. So this signals us that the manipulation from the support might be over, and we are waiting for some sort of retracement, right? For some sort of setup that will show us in the New York session over here. So price has taken this swing high, tapped into the order block, right? And we are waiting for our setup to form, right? So let's mark out the New York session open. Right, this would be the session open. And we are waiting for the session open before doing any move towards the sell side, right? So we are moving. Also, you can see over here, so price has taken the swing high. So we were in bearish market structure. Now we've taken the high, and retail are looking for buys over here. Why they are looking for buys? Because we've changed the structure. Really simple. So we expect price to manipulate over here to the highs and drop towards the lows during the session, right? So we expect price to manipulate with the session and drop after the manipulation, right? Because retail think this is a bullish market structure, and they think this how price will go, right? Based on structure, they think price needs to head like this, so they are starting to place their stop losses at the low, right? Again, using liquidity terminology against them. So price keeps on going up, and as you see over here, we are not at the open yet, right? So this is the open, right? Got confused. So this is the open. Price has accumulated on this support, creating liquidity at the low, right? So let's mark it, make it okay. So price has accumulated on the support, creating liquidity at this low, and tap this gap. Now we can drop into the lower time frame and try to get an entry, right? Like shown in the live, right? So over here in the live, we've opened the live, all of the levels marked. We've taken this buy side, we've taken this buy side, we've taken this buy side, all conditions to go down, right? So we are just waiting for a good return to some of the FEGs, and we can take a position lower towards the sell side, right? So this is what happened, right? Price goes up a bit, right? So we taken the sell side first, and then taken the sell side, and we do have another sell side. Now price again forms this bearish market structure, takes the high, enters this gap again, and we can expect price to go lower towards this sell side. We just wait for a more better confirmation, right? And we can see over here price has made this fair value gap, and we can expect price to go lower, right, without reaching back to this high, right? So yes, this is the YM position, right? Let's give it some more time, and we can expect, right? We could wait over here and wait over here, and the position over here heads, right? On the live stream, we've illustrated this position right over here. We've made a fake bullish market structure. We've accumulated on this support. The moment price broke down, it was the key to enter, right, after the manipulation of the open. You can see it on the live, and I hope you've enjoyed the recap, and peace.